Hi, everyone, and welcome to our last session of the day. We're talking about reinventing banking and digitalization of banking. I'm Allison Downey. I'm a partner here in the Boston office in our financial services practice focused on banking. I also have with me today, who I'll allow to introduce themselves, Bob Rivers, the Chair and CEO of Eastern, Katie Catlender, Executive Vice President and Chief Customer Officer at Cambridge Savings Bank, and Nitin Matter, who's the CEO of Berkshire Bank. Bob, do you want to just give some background on you and Eastern and maybe a little bit about what your bank looks like today versus during the height of COVID?
Sure. So hello, everyone. It's great to be here with you all. Eastern, as many of you probably know, is based here in Boston. We're now a $24 billion bank, fourth largest in the market, and a really diversified lines of businesses around commercial banking, retail banking, insurance, and wealth management. Relevant to the topic today, we've heavily invested in digital technology and innovation over many years. We've had an innovation lab for the last 10 years that has helped co-develop a couple of fintechs so far. In terms of how we've transformed during the pandemic, like a lot of organizations, in a whole bunch of ways in terms of how we operate, not the least of which is going from almost an entirely in-person culture every day to one that is almost predominantly now remote. But to give you a statistic on how our business has changed, and I would imagine Nitin and Katie, yours is the same for your companies, we are awash in liquidity right now. I'll give you a statistic. Before COVID hit, our loan to deposit ratio was 93%. After the pandemic hit, so I'll give you data, in September of 20, it went to 74%, just in a matter of 9 months. I picked September because we did an IPO in October of 20 and raised $2 billion in capital, which of course exacerbated that even further to the point that today, that loan to deposit ratio is now 62%, 30 points lower. And that's not because the loans have shrunk, it's because the deposits have just exploded.
Good afternoon, and I think we realize we're sitting between you and happy hour in whatever form and fashion that takes remotely these days and in person. I'm Katie Catlender. I'm the Chief Customer Officer of Cambridge Savings Bank, and I guess I'll tell you a little bit about myself because I think that's unique to why I'm here. I spent 25 years in healthcare and specifically health insurance, and I joined Cambridge Savings Bank and switched to banking 6 weeks prior to the pandemic. And my role is really meant to disrupt banking and disrupt the traditional thinking, organizational model, and strategy of a bank. And functionally, I have responsibility for strategy, for IT, for data analytics that's specifically focused on the customer, for marketing, for product, for digital, for a project management office, and for our digital bank that we launched midsummer last year. So my expertise is really around helping an organization change, fully centered on the outcomes we need to produce for the customer while thinking about the trajectory and where the bank wants to be into the future. And so that's my role at Cambridge Savings Bank. And CSB is just under $6 billion in assets. We operate mostly in Eastern Massachusetts at the moment. We are similar in terms of what's happened to us over the last 18 months or so from a pandemic perspective. We have commercial real estate, C&I, asset-based lending, retail, and like I mentioned, we launched a digital bank last summer that was really specifically purposed on niche customers that we were wanting to attract for the purpose of innovation strategies, test and learn strategies, and opportunities to really go to market in a much more focused way, and then translate that back into CSB proper. So our goal is really to operate very effectively locally as well as nationally, with a focus on the customer in the most convenient way based on their choice, which is really where you blend the digital and the in-person. So looking forward to talking about that more.
Excellent. Hello, everybody. I'm Nitin Mahatri. I'm the CEO at Berkshire Bank. Berkshire Hills Bancorp is about $13 billion asset size bank in New England, predominantly operating in Massachusetts, Connecticut, Rhode Island, New Hampshire, Vermont, and Eastern New York. We are a purpose-driven, community-dedicated bank, have been here for 175 years. Uh, my role, I came in about a year ago. I spent 26 years in banking, 13 years at Citigroup, and 12 years at Webster Bank, which is headquartered in Connecticut. And it just so happened those 25 years, I got into roles that were either turnaround or build or grow aggressively. And that's something I have to do all three of it. In this role, we have been a great institution, but we were struggling a little bit. Our stock price went from $44 at one point of time all the way down to 8. And that's when the board decided to bring in new leadership. And that's where I'm here. And I'm fortunate to have a great team. And we're also building a new team to kind of bring in new thinking, just like Katie was talking about, because banking has to transform. That's a absolute imperative. And I think everybody talks about Amazonification and Appleification of everything, but banking is also different because you still need to retain that element of personal touch. So how do you marry up digital and personal touch together? I think that's going to be the most exciting part of the journey. And I'm sure we'll talk about that a little more, but I'm excited about the future of banking and especially future of community banking because technology has democratized that very, very aggressively. And it's just a beautiful journey ahead.
Great, thank you. So that actually leads right into my first question. So when we get into this new normal, what are you seeing in trends for, both commercial and retail customers? And how are you kind of thinking about that balance for digital between a human touch and innovation and digitalization of your bank?
So certainly we've seen the acceleration of digital adoption in the pandemic, largely because people were forced to. Uh, we closed our branches for short periods, then we went to lobby service, and for large swaths of time, for many people, they weren't able to bank the way they were used to banking, which was coming into the branch and dealing with a person for transactions. And when forced with that choice of having to use digital tools where they could largely replicate what they had done in the branch, lo and behold, many did. And that really accelerated the use of mobile and other tools that we've had for obviously many, many years. As we look to the future, really our sweet spot is a community bank, and I imagine that Katie and Nitin would also say the same. And I think this is the opportunity for community banking. We, for years, prior to all of this and the pandemic, didn't compete very well for younger people who largely preferred Bank of America. You know, and it wasn't because they had branches everywhere. And some of it was because they did have ATMs everywhere, including on college campuses. But it's because their perception of their digital tools was very, very high, and the access was very high. And the needs of those younger people were pretty simple. But what we've continued to find, and I think is our opportunity, is that people get older and their lives become more complex. They ultimately need to talk with someone, no matter how much they might be able to self-educate on the web. In fact, that's probably made the learning even tougher because there's so much information. I need someone to help me sort it out. So that's really what we've found in the years past, and certainly now that people come to us and switch the relationship because they're looking for someone to talk to. That doesn't necessarily mean that person has to be physically in front of them, because again, speaking for myself anyway, I learned a new trick this pandemic, which is called Zoom, which I'd never used before. And so have many of my colleagues, and so have many of our customers who now we found ways that we don't have to get together in person, which is highly inconvenient or less convenient to be sure. And so we're starting to roll more of that out in that use and engaging in our customers, again, in person, person to person, but less relying on that physical in-place gathering that we used to.
And I'll just add from our perspective, and I'll take our small business, our consumer, and our commercial clients one by one, but with the same philosophy, which is we as an industry, I think, are finally starting to understand that when you say you want to put the customer in the center, you need to think about it from the perspective of choice, convenience, personalization based upon their business plan, based upon what they're trying to achieve as a consumer. And so I think the benefit of the pandemic is digital has been around. And I think there's always been this gun shyness almost of banks to say, well, what about branches then? And I think the pandemic has just accelerated the opportunity for us to really embrace digital is here to stay. And it's really less about digital versus branch and more about what are our consumers telling us they want from us? What do our businesses need from us to do their jobs in a much more effective, efficient way as they strive to stay alive in this environment? So for consumers, I think, and I mentioned how we're organized, for consumers, it wasn't so much about, well, how do we get transactions to happen more digitally because people don't have the convenience of the branch? It's more what we did with the information. So we looked at people who were transacting on a regular basis, people with 20 or more transactions a month with us. And we said, what are the things we need to make sure they can still do in a meaningful way? And how do we support them differently because we know what they're trying to do and we need to support it in a way that is digital versus in person moving forward, which set off a series of different features, different marketing campaigns, different financial outreach, et cetera. But I think knowing that transaction data and how it needs to shift in that type of environment allows you to stay really personalized and focused on the consumer, for example. For our small business customers, it was really about staying alive and keeping their doors open. So the quickest way we could get them funding through the PPP program, for example, or the quickest way we could decide the impacts of taking fees off of overdrafts and things of that nature for a while. Those are the ways in which we used our data and technology to say, we're here for you, we just want to help you do business. And for our commercial clients, it was really about making sure we were structuring our relationship model in a way that said, what does advise and execute need to look like in an environment where there needs to be more of an automation of how we do business so they have better access to lines of credit during this time, or ways to understand whether or not they're going to be in a hole because of supply chain issues, and what can the bank do to support that differently. So those are the ways we shifted, not necessarily how our customers shifted. It was more the quick reaction we felt we needed to make.
I think Katie said it well. I would just say exactly to that point about there's a almost a rank ordering of adoption there, and consumers obviously are adopting this much faster, and followed by small business, followed by commercial. But there is, I think, streams that run through all of those, how we digitize, and we've actually trademarked what we call as DigiTouch approach to managing our customer relationship. And so everything's looked at through that lens. And I think we look at everything that customers can do digitally and how do we, really create an experience that's on par with the largest bank and fintechs and big techs. And then what are the elements where customers do? Because even today, and this is a shocking stat for even me, who's been banker for 26 years, even today, the millennials and Gen Zers do end up going to branches. And the biggest mistake we do as executives is, oh, but my daughter who's 20, she's never been to a branch, so no millennials go to a branch or Gen Zers don't go to, but that's not true. I think what happens is they absolutely do not want to transact going to a branch because they're just so comfortable with their cell phones. But every time they actually want an advice that is important to their life stage, they do want to talk to somebody. Now, how do we create that experience without them having to get in the car and go to a branch is the part that we're trying to solve for. So that DigiTouch, I think, how do we bring it to life? And the other part of it is, and you can't do it by yourself, especially bank our size, 13 billion, you've got to accept that my bank's asset size is the same as the budget of JP Morgan's technology, right? So I got to come to terms with that very quickly and say, okay, I can't do this alone. On the other hand, though, JP Morgan, as you know, has announced that they're going to, go do away with their core systems. And they're going to go with this new platform, right? Guess what? There's another bank here in New England that's just about $1 billion in asset size. They're going to the same system. So that's where the democratization of technology comes to play. So here's a $3 trillion bank, and here's a $3 billion bank going to the same platform. And I think that's what's going to be exciting about this digital journey for us.
And Nitin, I think you alluded to this, but obviously we can't talk about innovation in the banking space without talking about fintechs and non-bank competition. And I know you guys just entered into a new partnership, but can you share a little bit of how you're considering those fintech companies in your strategy of innovation?
Yes, and I remember I was on a panel with American Banker, this was 2009, where fintechs were not called fintechs, they were called P2P lenders. And the headline topic there was P2P lenders, friends or foes. And I happened to be on the friends camp where I was saying, we got to partner with these folks because we have the customers and they have the experience. And if you're trying to do customer experience, that's how the partnership works. And I think it's panned out to be that way. And I think the fintechs have realized that many of them started out saying, we're going to get the banks out of the way and we're going to, substitute them. And soon to realize that the banks do have the infrastructure, the regulatory jobs, the credit experience, the trust, everything that they've done over the years. Now they're offering themselves as platforms. Bob and Katie probably, we get 20 emails a day from different fintech partners wanting to talk to us. So you have to be selective. They got to be like-minded. You got to look at their business model and how aligned it is with yours. And we have, and I think it's not just about the front line, the slick-looking, interface online. It goes all the way back into cybersecurity. So from account opening to safety and soundness, there are elements where you can, partner up with fintechs that have built good platforms, and we're accelerating that journey now.
I'll just add something because I think it complements really well what Nitin said, which is the importance of the ecosystem and the importance of seeing the benefit of complementary skills and expertise and combining them together for the benefit of the customer. And I'll just share an example from healthcare that translates so nicely to banking. When I was doing a similar job at Blue Cross of Massachusetts a few years ago, we were talking about healthcare is about 5-6 years ahead of banking in terms of this disruption, all the players out there in the market that are disrupting the traditional health insurers, et cetera. And what we started talking about, thinking from the customer at the center, is, well, what is the biggest thing that a customer does from a healthcare experience standpoint? They fill their prescriptions. What does Blue Cross do from a customer perspective, from filling prescriptions? Not a whole heck of a lot. They pay the claims so that someone can pay their copay. So we started thinking about, well, how do we really disrupt and make better the experience of someone getting their medication so that they can stay healthier? And what we did is we formed a partnership with Amazon PillPack in order to have that be branded a Blue Cross experience. And Blue Cross of Massachusetts was the first to do that. And if you translate that into what we need to think about as banks and what we need to think about from a customer perspective in terms of getting that business to thrive or getting that consumer to be in a less vulnerable financial position, we need to look at what's around their life or their lifestyle or their business stage and say, where do you pick the fintechs you need to partner with so that you can be the first to really accelerate the betterment of what they're trying to accomplish, which naturally translates to your bottom line. And those are the types of ways that we are thinking about our fintech partnerships and also making sure we can move fast enough to really take advantage of being a fast mover, because that's really critical as a community bank and in a commodity industry, but also to make sure it's really in line with our values also as a mutual bank.
Just hearing all this reminds me of our innovation journey that started quite some time ago, relatively speaking, back in 2011, when our CTO and myself decided to do a random walk around Kendall Square. He was doing his executive MBA at MIT, and I said, well, why don't we just carve off some time? We've got to be more intentional. We can't just keep monitoring the space of fintechs and the names we knew and lots of the names that we didn't know, and we have to go get in the mind of the disruptive innovator. We got to see how they think. It's 2011. And so we carved out, I said, tell me what your class schedule is. We'll carve out some time. We're just going to walk around Kendall Square. And our whole ask to somebody is, could you introduce us to somebody else who would talk to us? This is before them looking for partners, right? This is the age when the fintechs are, you bankers, especially a 200-year-old community bank, you're dumb, you're slow, and we're going to take away your lunch. And but we're happy to talk with you and tell you how we're going to take away your lunch. So we did that for 2 years, and it led us to the team of Numerated, which today is one of the largest, fastest growing fintechs. It's a small business lender. They were formerly running a company called Perk Street Financial that wasn't a sustainable economic model. Got a lot of customers, but we're not a sustainable economic model. And they came and started a lab that started with 4 people, grew to 23. We spun it out 3 years later. It was a crazy experience. You can read about it in a Harvard Business School case, by the way. It was written on it. Talks about a lot of vodka and beef jerky and some things that we did through them to shock the system. But it was interesting during that transition how the swagger went away. It wasn't long after they partnered with us, and certainly among them, because they recognized, as Nitin said, we have customers. You don't have to go get them one by each. We know the regulatory framework, and you got to operate with that. We have lots of capital, so you don't have to run around and go raise it while you're trying to build something. And I think many of the fintech partners began to realize it itself. So what we do today in our second iteration of the lab, because the first one spun out, is that we monitor the space, we look for relationships, and we're very intentional around small business and middle market. That's really the core of our franchise because the space is overwhelming. If we went out there and explored every fintech around everything that we do, we'd have to massively expand the staff. We would never have the organizational capacity to do it. So I agree, you've got to be very focused about, what customer are you really trying to serve most through this? What do they need? And what are the potential solutions out there that help you meet them? And that's really how our hunt is organized today.
Great. So in some of the sessions earlier today, we were talking about data that's available, and that we had the gentleman from the Fed talking about, if you're on some kind of blockchain, what kind of information is available to the Fed, or in this case, we were talking about China and what kind of information was available in China. But as we think about digitalization of banks, and your bank specifically, how are you thinking about the increased data that you're going to have, and what opportunities and challenges you'll have in using that?
Katie should take this one first, because in the pre-meeting,
it
was awesome. And I want to hear it again.
Uh-oh, I don't know if I can do it again. I don't remember what I said.
So impressed. I was like, whoa.
So let me start by saying, when I first got to the bank, the first key role I hired was a customer data analytics officer. And CSB has an incredible financial arm of our organization who uses data for the purpose of financials, auditing, and regulatory. What our role was under the team that we stood up is to look at our data and combine it with outside data for the purpose of saying, what do we learn and what do our customers need from us, and how can we act more quickly? And so having dedicated time and resource that's focused on saying, what is your own data telling you? And then combining it with external sources is really enlightening. And it often causes you to say, wow, the strategy we were really thinking about doesn't make sense. And I'll just give you an example of one of the early things that we are focused on, we focused on last year. And this is third-party data. And then I'll talk for 1 minute about the ethics of data, if I could. But third-party data, we decided that it was really important as we get to know our customers and what matters to them to really understand their financial health. So we partnered with the Financial Health Network, which is a nonprofit that serves a lot of different banks, and they categorize people across the country based upon common elements like household income, FICO scores, et cetera. And they put them into coping, vulnerable, or struggling categories of financial health. And so we ran our own population through that and really understood who fell into a category of being able to pay their bills month to month versus those who are really able to save or put money towards a student loan or really take advantage of wealth management services and things of that nature. And what we found when we did that was really interesting. So we serve fairly affluent markets in Massachusetts. That's pretty well established through, if you just look at census tracts. People with the highest incomes were the most vulnerable. And so it makes you realize when you look at the data and then you look at spending habits as you group those people, you see where you can be really helpful with suggesting ideas or opportunities based upon savings goals or based upon spending goals that people may have. And so we're really starting to play around with how do you really understand themes that you're seeing based upon our own data, transaction data, what products people are using, how often they're using us versus Eastern, for example, but also really making sure we know how financially well are people to do the things they say they want to do, and how willing might they be to hear advice from us. And that's a really important way that I think we can really put teeth behind what we're all saying right now, which is to really support and be a financial partner. Um, the key to that is also having structure around the integrity of the data, how you choose to use data, how you give transparency around telling people how you're using data and allowing them to control privacy. And so some of those features we've set up in our digital assets allow people to control that and allow us, as well as other partners like Amex, to see whether or not they want their data shared or leveraged. And so there's a lot of ethics behind it, but I think the notion of using data for the purpose of better serving the customer and better serving more populations is really what we're striving to do.
Go ahead. Um, it's one of the discoveries. I've been in this business for 40 years next month, and working with the team from Kirk Street and now Numerated, the awesome power of data that we already had was a real revelation. Because they had data scientists a part of their team, and they could slice and dice the data set that we have. And I realized that our data set is massive. I mean, we're not the biggest banks around, but our data sets are massive. So for us, it's 600,000 customers, 1.8 million accounts, and 180 million transactions a year. You take that data set, not only is it rich with all kinds of bits of data that tell you about how your customers are behaving, as you know, you append it to outside databases, you can learn lots of ways about how they're transacting today and how you might better serve them. We use that data actually to monitor which one of our, what sort of penetration over time, because we could get the history, were our small business customers using online lenders. This is, again, several years ago, and it was in the low single digits, but creeping up, and you could see it. And today, we're using that kind of data with another fintech that we're co-developing called Monit to develop an analytics engine to help small businesses better plan their cash flow and anticipate possibly a lending need or other needs that they might have. But I'll tell you, as someone who's in the business for a long time, this is a relatively recent learning for me, and really for any organization, how much data you already have that we don't use.
Yeah, absolutely. And I used to jokingly talk about why Amazon would never become a bank is because they would never want to be regulated. They wouldn't want to deal with all the infrastructure that goes with it. But they would give Andy Jassy would give his right arm to get the data that resides in the banking system. And that used to be our competitive mode and say, okay, now that's good, we can relax. But no, that's not true anymore because banking is getting to be open banking. And now it's getting APIs. So that data is accessible and available in a broader ecosystem already. So exactly to Katie and Bob's point, how do we use that data most effectively to help the clients get more efficient? And then in the future, and not too far in the future, near future, you start participating in broader ecosystem beyond just the business of borrowing, lending, and investing in retirement planning. And I think that's where the opportunity is. And I think the faster we build those platforms, and we've invested in the last 12 months alone, we've completed our cloud migration, data warehousing, and middleware integrations. That was the entire focus of the organization.
Great, thanks. So Nitin, you actually mentioned regulatory,
Yes.
and obviously banks are highly regulated entities. Can you share a little bit about how you're considering regulatory feedback in determining your digital strategy? And also, I think on our pre-call we mentioned about, sometimes there's some mixed messages. You might get a different push from a regulator as, the messaging from the administration, and how are you considering kind of the larger picture as well?
I'll start off and say most regulators, I think their single biggest lens is safety and soundness of banking system, right? And I think that you got to applaud that because that's your charter as well. I think where you become a partner with your regulators is being transparent and build that relationship and say, here's how I'm thinking about evolving the institution. Here are the ways we're trying to attract new customers, partner up with new entities. We've been transparent. I'm on a call every month with all of our regulators and talk about what my current thinking is. And not that it changes every month, but every evolution or iteration of the thinking, they are fully on board and they've been excellent, excellent partners. There's no surprise. There's no pushback. They asked all the questions, which I expect them to, but there's never been resistance. And I think just in the last 5 or 6 months, we announced 3 new partnerships, and they were fully behind it. So I think that helps to have them on your side and be engaged. And they actually want to hear that as well because they want to expand their lens of safety and soundness while being participant in a broader kind of ecosystem as well.
Yeah, I couldn't agree more. We have a great partnership with a lot of our regulatory partners, and I won't name who, but the search engine you use all the time, we were one of the banks who was thinking of getting into banking with them about a year ago. And we immediately talked with our regulators about it, and they were thrilled to be at the conversation at the point of idea. It was really exciting for them. It was really interesting for them to be seen as a sounding board. And that's the experience we've had. And, I think a lot of us have the benefit of working in a highly regulated and highly respected towards regulators environment. So you really take that relationship and it's a push and pull of information and learning with each other. And that seems to break down any issues with the slowness by which legislation or new law may occur. And I think that's what's key.
I mean, you talked about the conflict, and you can manage that conflict in the ways that you've described and build that relationship as you should for many reasons. It's interesting, when I think about our regulators, our primary regulator is the FDIC, so that's the Federal Deposit Insurance Corporation. That means they insure the deposits if the place goes south. So they're very concerned about safety and soundness. And yes, there are other parts of government that want you to lend to more people. But at core, the FDIC is worried about you getting too creative with loans, because that's really what kills banks and causes them to fail. And then the FDIC is going to kick in some money to cover the deposits. So that's a classic push and pull that we've had for a long time. And it's interesting. There's been a long quest among lots of banks, certainly lots of community groups, of if you banks could just be more creative in your lending, you come up with a new algorithm that considers other things, you could make more loans to people who really need them. And time again, all this different data gives you more insights, but cracking the code on a different algorithm for lending, because at the end of the day, your credit score is the result of an algorithm, and it's time tested. It's very hard to do. That said, though, the regulators love when you do lending via technology and they love this with enumerated, because they don't want you to get creative in lending, and they certainly want you to stay in the box, and they want to be able to track it. And what it allows you to do in technology, in your underwriting, through the enumerated system, for example, or any automated system, they can go back and look at the decisioning. The code's all there. They see the decisions, and the decisions are all consistent based upon certain rules. So that dynamic is kind of interesting. I've found the other thing that we find more recently is the regulators, we've had the lab now for 10 years or more, and they always want to come in and talk about the lab because it's cool and it's interesting, but really what they're coming to talk about today when they want to talk about the lab is they're really asking, you're not doing crypto, are you? And that's really what we find. It's kind of like they come in, they talk, and as long as you don't say you're doing anything in crypto, you're good, and we sort of move on. So.
Great. So Bob, you started to allude to this. So obviously all of your, oh yeah, hi.
Can you talk? Thank you. Can you talk a little bit more in terms of regulations specific to model risk management, especially among like community banks? Because like a couple of years ago, I was like a lot of pressure and focus on model risk management on those larger banks, like over like trillion banks, and they spend a lot of money on that, build together their model risk management structure framework. And like as KPMG, we got a lot of like uh, opportunities and engagement with those larger banks. And I think nowadays you were talking about data, right? And then if you need to use data, the model come in, right? And we have seen like a lot of like smaller community banks like moving to have more models in either their budgeting, like reserving capital, all those sort of stuff. But then like they kind of like struggle with their model risk management. So can you talk a little bit more in terms of like challenges as well in terms of like the path forward and vision in community banks or model risk management?
Well, from our perspective, it's a real evolution of the business. Particularly as you get larger. We've certainly. You would think that this is only the purview of the larger banks. They get the most attention first, but it does trickle down. And we certainly noticed as we cleared 10 billion in assets, things really changed. One of the ways they changed in the regulatory body is all the things we used to do locally with the New England FDIC office, our friends that we've known forever, they were still coming in and doing the examination, but the final report and the final grade got kicked to Washington where we didn't know them and the game was much higher. This was one area that it was for sure. Before, we had all kinds of models. Many of them were oftentimes Excel spreadsheets and linked together and fraught with all kinds of risk of error. And what it's caused us to do is not only stand up a separate department, but also require the owners of those models to certify and also cause the models to become much more robust technologically. So no more spreadsheets. So that you had more predictable outcomes and better controls around them, and a lot more cost in the process.
And that's where I think the use of internal technology and process automation is so critical, because it's not about how does the model need to change as you grow. It's how do you ensure you have more confidence and accuracy and governance over your data. And that is the way in which you need to think about whether it's risk modeling or the conversation we were having previously, safeguarding customer information. It's around orienting an operating model where at every point in time, there is security, there is correctness, and there is definition that every actor in that process or every automation that's put in place is tested effectively and has multiple sign-offs. And I think that's what even at our size, when we talk about that with our FDIC examination partners, and we have, the highest performance level you can have in this space, that's what we talk a lot about, and that's what gives them the confidence. And I think having that philosophy and the people leading a risk area, for example, is really critical. And then the good use of the most modern technology and support.
I think we have similar experience there. I think when we talk about this internally, and this is part of the overall, we talk about model risk management, the four components being the data, the talent, frankly, that kind of processes that data, testing, and the independence of it, right? And I think you start with the data, and that's where our previous question was, and the quality of data is important. Data governance elements are critical. Once you do that, do you have the right talent to do all the right, framework and establishing the controls and back testing and validations? And then how independent it is. And I think sometimes you do solve for it by getting somebody externally, whether it's Moody's or RMAs, to bless what you've done. If you're not 100% sure, then I think you do that. And I think that's the evolution that we've been on.
I've got a question from our audience here. Bob touched on this a little bit where he said, a lot of these startups said that they were going to come eat your lunch. And how is it that community banks still exist when you see like a company like Walmart comes into an area and kills all other retail locations? Like, what is it about the community bank niche that seems to, keep going? That you're a $13 billion business, and someone like Bank of America doesn't just go gobble up every community bank, or Chase or whoever. Why is it that regional people are still holding on to regional banks?
I think from our perspective, first of all, I'll say that, size isn't everything. I saw a chart the other day that looked at the most valuable banks in the country tracked over the last 12 years by multiple, tangible book. And you looked at the market cap of those, and they were all small. Our market cap's $4 billion, and it was right in and around us. There were a couple outliers, like First Republic, which is much bigger, was on this list, but they were an outlier. So when we looked at deliverance of value to shareholders and what shareholders value, which is based on your financial performance and your ability to deliver to customers, again, they tend to be smaller. And I think the key to that is the beauty of that size, the ability to be nimble, the ability to be close to your markets and close to your customers. And that's not to say that you're making character loans. What it means is you understand what's going on in your community. It really helps in attraction of talent. I mean, we bring in talented folks in data analytics and technology because they're not lost in the system. They have access to senior folks like us, and that's great for us and from a learning perspective. But there's a lot in there that allows us to better compete for talent and resources, and ultimately to continue to serve our customers very well, even though Bank of America's technology budget is bigger than Nitten's bank, and certainly probably bigger than ours too.
Yeah. Yeah, and I think that it becomes a parochial system at some level. I think the question is a legitimate one. They were, if you go 30 years ago, there were close to 12,000 banks in the country. Today, there are 5,000. So that has declined and will continue to decline. And I think if you look at those 5,000 banks, 90% of the banks are less than $1 billion in asset size. So it's going to become very difficult to sustain yourself just given the cost of compliance, regulation, technology that comes with it. So that said, I think there will be a significantly large number of banks in the US because we just work like communities as a nation. And I think if you go up to Canada, there are 5 banks. And here we are 5,000 banks. And you could argue as to why that is the case. And it's because community banks do, to Bob's point, become the anchor for the communities. And if you deliver at par service as the larger banks, they'd rather bank with you because they feel better connected with you than a large institution that's a national institution.
And if you look at some of the research around Gen Z population in particular, and the reason that's important to pay close attention to, Gen Z is the largest population, and they will be the most wealthy, and they will be the most educated, and they are the least trusting of financial structure because they were born in an age where their parents lived through 2007, 2008. So big government is not something they like, which is why they're so interested in crypto, because there's no regulation around it yet. But I share something about Gen Z because if you look at the similarities between baby boomers, for example, silent generation, and Gen Z, people care about purpose-driven institutions, whether it's their banking partner, whether it be who they get their groceries from, whatever that may be. It matters, and it is the age of the consumer or the customer, so they're going to bank with who they feel like they have they're getting most value out of, but the value is given back to the community. And I will say we have several large clients, probably not quite the same stature as your books of business, but billion-dollar, multi-billion-dollar clients who bank with us because we understand the complexity of their business. We take our time to really understand where they're trying to go and support them in a way that's creative. It's based upon who they are, what they're trying to do in their industry, and we help them give back in their community. And those are the types of things that matter from a mutual structure institution or a community banking institution. And that makes a difference. And I think for that reason, at least in the short term, even as things become digitized, especially in Massachusetts, that's a really important factor.
Yeah, I've got to tell a story to this point because I think it makes the point about size. So for many years, I lived in Needham, which is a town nearby. And if you know Needham, you know in the center of Needham is Harvey's Hardware. Occupies about 8,000 square feet. It's a family-owned business. It does about 15 million in revenues. And I would never think of going to Home Depot, even though I could go to Home Depot and get the same, probably better selection, and certainly a much lower price. The reason was I didn't know what the heck I was doing. So I could walk in and someone would greet me at Harvey's Hardware and I could say, I'm just looking for this kind of screw, and they would take me back or answer any sort of question. And it's again because they were small. There's a convenience in being small that I think sometimes is underestimated.
Great. So I think it's about time to wrap up, but we'll finish up with one kind of broad question for each of you. As you put your futurist hat on, what is one prediction you'd make on the state of banking in 2030?
You want me to go first? I think the simplest one would be there'll be fewer banks, there'll be fewer branches, but the banks that embrace technology as part of the solution to create that digitouch experience, as we call it, will actually do well and actually would be able to participate in a broader ecosystem that goes beyond banking. So that broader ecosystem could mean you participate in crypto, you could be participating in cannabis banking, you could be participating in healthcare. There is just a breadth of ecosystem that is so closely aligned with the financial services that you could actually participate in it. So that would be the space to watch.
I would just add to that I think it's going to be seamless. I think it's going to be really easy, and it's not going to be top of mind for people. And that's a positive thing. The bank and the people within the bank will be there for those complex needs, but everything else will just be a simple, easy touch of the button where the bank is seen as a partner to, at least my vision is, the bank is seen as a partner to get you to where you're going versus the heartache you have today of paperwork and things of that nature. And I think that's the beauty of automation and technology, is that simplicity.
Yeah, 2030 isn't all that far away, so it's not really all that long-term of a prediction. And I'd agree with what both of you said. And certainly there'll be fewer banks, but certainly we're moving to a much more open architecture system than we've had before. When I started my career, everything was sort of one system in-house, very integrated. Even at Eastern, when I first joined, it was sort of Metavante or bust, which is now FIS. It was, what can we buy from this core provider? Today, it's completely different. Oftentimes, when we talk about fintech partnerships, we think of the Numerateds or the Monets or the fancy startup stuff. But we have 57 different fintech partnerships at the company. It's just oftentimes from a mindset standpoint, we don't think about them that way. Some of them are actually quite large, but they provide a solution that's different and better and more seamless than what we had before.
Well, thank you guys for participating and your advice and wisdom here. And thank everyone for joining us today.